Welcome to the last weekend of the summer edition of the Real Money Show.
The back to school special.
It's the back to school special. And you're going to put an ounce of silver in every kid's backpack on their way to school.
You
so
will.
that they can remember in their economics lessons what real money actually is.
Presented to the teacher. Yeah, exactly.
Oh, really good. If she got 25 or he got 25, 30 ounces at the beginning of the year, that would be an exciting thing.
Better than an apple.
A lot of stuff happening this week. It's a virtual cornucopia of information. I'm sure throughout this episode we'll find something big that's going on. I've got a couple of ones that I want to share with our audience. But first, the number 1-877-8-SILVER, the website guildhallwealth.com. That is the number. That is the website if you want to protect your wealth, if you want to be insulated against geopolitical risks and inflation, and you want to put your mind at ease with regard to where your portfolio is at. It's all about having some physical hard assets in your portfolio, and we are the experts at doing that. Guildhall's been in business since 2002. We've been offering physical direct holdings of gold and silver in registered accounts since 2016. And I want to congratulate everyone who has been able to get into the market over the summer, because we think big things are about to happen. They've already happened, in actual fact. My name is Jeremy Wiseman. I'm joined by Jerry Correia. Because, Jerry, gold is up 22% in U.S. dollars so far this year, even with a pullback into the end of this week. Gold's up 24% in Canadian dollars. Silver, right there, neck and neck. So far this year, we're up 23% in U.S. dollars and 25% in Canadian. Of course, let's get to our first story, which is silver got very, very close, actually broke $30 this week, a monthly high, and we saw major panic seem to set in on the bullion dealer side, or whoever does not want to see this market break 30. Give us the tale of the tape.
Well, it was a relatively quiet week, not too much news, so a lot of consolidation in the gold market. So you're going to see a lot of whipsawing in the gold and in the silver market. To start the week, silver was rocketing higher. We saw this in the overnight on Sunday evening. In the overnight Shanghai market, silver started to ratchet up. We hit $30.20 really rapidly, and then we saw panic. And remember, in China, the price is much higher. In China, we hit $32.70, over 10% higher than our worthless spot price. We'll talk about that a little bit more. But the gold price is relatively stable this week, hovering around 25, and then the silver broke $30.20. And brought to us from an analyst who covers the COMEX positioning in their report. He noted that the silver market on Monday and Tuesday had to trade 400 million paper silver ounces to control that price, breaking above $30.20. Last week we talked about the LBMA panicking. This is an all-out panic on silver. And if you're noticing that central banks are not afraid to buy gold at the highs, wait till you buy some silver at these lows, because silver is a coiled spring. Silver is that Achilles heel to a weaponized financial system. It is your weapon of choice. So the COMEX had to print and trade 400 million ounces. In the last 2 days of this week, more ounces have been traded than is produced physically in an entire year. The banks are panicking. They're trying to maintain control, but in a physical market, you cannot maintain with your paper positions. You cannot hold the gold. You cannot hold the silver, especially. The financial system is preparing for what's coming, and people have to do the same thing. The panic is on, but the silver squeeze is here, and it's going to ratchet up even higher. A coiled spring.
Yeah, Jerry, this last week, Rafi Farber put out a video for his weekly video with Arcadia Economics, and he was showing, and I looked it up, I saw it myself, BlackRock iShares Gold Trust rising in value, but the gold holdings are dropping. So how can you have both? If you were selling off to keep up with the rise in value of the product, it's still it still wouldn't be going down. So they're selling off more, and it begs the question, they don't have to hold all of the gold for the holdings? Is that true?
No, that's right. That's correct.
So in a time like this when anything can happen, we're going to talk about capital controls a little bit later on. Not capital controls, capital requirements. Capital controls is a whole other thing for communists and socialists. But
we'll go there too.
Maybe. But no, capital requirements and what that means for precious metals. You want to make sure that you actually have the physical. You don't want access to this market, especially if things start to unwind. I was looking at something earlier today. Stocks are all in on a soft landing, but you've got companies that are mulling bankruptcy. Majority of Americans can no longer afford the average home. Even last year, taxpayers in the U.S. spent $150 billion to support 20 million illegal immigrants. And you wonder what those numbers could look like in Canada.
I know,
right? It's a lot of government wastage, and it's all on our shoulders. So you want to make sure that you actually have that protection, because what if there is capital controls on banks? What if they do have bank holidays? It's not unfounded.
No, we've seen these in the past, and certain policies like those, although they sound draconian, they're in the books. They were drafted in 2013. The bail-in clause was drafted in the Canadian budget, and it's just been modified since then. Yeah, there's a lot of gray areas as to what could potentially be bailed in. What bank account? What account can they use? Of course, they're not going to advise and provide you which account is going to be used, because no one will use that account. So a lot of gray areas, but Bank of Canada has shown, the banking system has shown a lot of weakness. And what we're seeing in Canada, we're just losing control. I mentioned earlier there was not a lot of news this week. Investors are really waiting for crucial economic data coming out next week from ISM, inflation, U.S. labor market stats, non-farm payrolls, and even FOMC. So, and next week, the Bank of Canada, I think on Tuesday, after a long weekend, is going to potentially cut interest rates once more. But this week we had some Canadian news, and talking about Canada and our economic system and governments. Just in Canada's second quarter economic growth, the GDP was boosted this week, so it grew more than expected because of government spending. Government spending jumped 11% annualized, and this is being reported by Genevieve Roque-Decter, a CFA. Canada's government is now 40% larger than it was a decade ago. 1 in 4 people now work for the government in the public sector. And per capita GDP in Canada fell, though, for the 5th straight quarter. So we're not producing anything in Canada. The economy is actually a zombie economy, just driven by government spending and bigger ballooning governments. The GDP per capita in Canada is actually falling over 2% annually, and there's zero economic growth in 6+ years. Your take on Canada's economy? What's going on here?
Well, my take is that if you look around, you just say, you can ask anyone, are things better for you? What is your definition of better? If things were getting better every year over year, what does that look like for you? What does that mean for you? Could it be something as simple as going out for more dinners, going on vacations, having more spare time to visit family or whatnot? Maybe it's having confidence that you're not going to lose your job, job security, things like this. What in your opinion is better? What does it mean to be better? And when I look at the performance of gold and silver over the last 20 years, and I see gold's up over 500% in Canadian dollars, silver's close to 400% in Canadian dollars, I think to myself, man, we have really helped Canadians stay ahead. We've really helped them to maintain their standards of living, and it's a very simple thing to put in a portfolio and just get those excess gains. You want to beat inflation over the long term. If you think about putting money into an RSP, what is the goal? How do you know when you've won? First off, you have to beat inflation. You have to be able to say, when I withdraw those funds in 10, 20, 30 years, I have to maintain the purchasing power. It's not enough to say, I want to make money. It's, does that 10,000, 100,000, 500,000 buy me the same amount of goods that it did 10, 20, 30 years ago. And gold and silver have done it. I hate to say it's that simple.
Mm-hmm. And we do that. We offer physical gold and silver in the RSPs. You want to get in touch with us. Guildhall, we're the ones that put this together in 2015. We are your precious metal specialist when it comes to opening the RSP, getting it transferred seamlessly, and getting the physical precious metals in your account so that you can go to the vault and physically and personally audit it yourself. Because if you cannot hold it, you do not own it. And when you're in the vault, you can hold it and go through the serial numbers, because this is direct ownership. You're not getting a promissory note for some gold and silver somewhere. Direct ownership is key. And I think when we're talking about that fund that you were talking about from Rafi Farber, those ETFs.
Yeah, the BlackRock iShares Gold Trust.
Exactly. You don't want to get something with counterparty risk. Counterparty risk exclusion is important. You want to separate and isolate yourself, insulate yourself from counterparty risk. And congratulations to everyone who's buying the dip. You want to give us a call. We're launching a new website, so bear with us. It's going to be launched this week. And I want to encourage everyone to check out the 10-ounce silver bars. Our prices cannot be beat. GuildhallPreciousMetals.com. Give us a call, 1-8778-SILVER, and the website guildhallwealth.com to learn more about how you can hold physical gold and silver in your RSPs, liras, RIFs, lifts, and get the physical in your possession as soon as possible, because the uptrend in silver is about to break to new highs.
The number, 1-8778-SILVER. The website, guildhallwealth.com, for those who've been holding gold and silver. Hopefully you've been enjoying the ride throughout this year. We're up over 20% for each metal. And it's hard to say that this market has really been manipulated when you see gains like that. But, you know, you're almost kind of thankful that they threw 400 million ounces at the price of silver to get it back below $30, to give people more opportunity to get involved in the market. But, you know, there's this idea of shooting yourself in the foot, because this article came across Jerusalem Post this week titled "China's Strategic Silver Takeover, a calculated move to drain the West." Effectively, we are in competition to stockpile physical silver, and we didn't even know we had a silver race, a metals race to stockpile. So let's go through this article, because I think it's important to understand that this isn't just about your everyday person trying to protect against inflation and trying to hedge geopolitical risks or risks of stock market collapses and whatnot, potentially a hard landing, whatever it is. But as we talked about on the last show, I think at length, Jerry, regarding the different usages for silver and what optimism there is in the industrial side for this market, China's taking part in that as well. Let's go through this article. Do you have it with you?
I do.
Okay. Let's go through it. It's a pretty quick article. I'll read the beginning here. It says, while the world has been focused on the geopolitical tensions between China and the West, a more subtle battle has been unfolding in the global financial markets. China, through a series of calculated moves, has been quietly accumulating vast quantities of gold and silver. This move has signaled a potential shift in the global economic landscape and highlights the developing countries' need for exorbitant amount of silver resources. It goes on to say, silver, China's secret weapon. In addition to its gold hoarding, China has also been strategically increasing its silver reserves. The Shanghai Metals Exchange has seen a significant surge in silver trading volume, with prices consistently higher than those on Western exchanges. This suggests that China may be deliberately driving up the price of silver to drain the West's resources. In 2023, China reportedly had silver reserves of 71,000 metric tons, second only to the silver-producing powerhouse country of Peru, which boasted 98 million tons, or metric tons, I should say, in reserve, and the U.S. came in seventh on the list, with a stockpile of 23,000 metric tons, behind Poland, who we're going to talk about in the next segment with their central bank acquiring physical gold, Russia, Australia, and Chile. So let's talk about China getting into the market. 71,000 metric tons is absolutely massive. And obviously they're doing it because they're building things with it like solar power and other things. Is this just another move for them to gain sovereignty in the market where they don't have to depend on trying to get it from sources around the world, or are they trying to get it before the price goes up?
I think a little bit of both. This is the silver war and a silver race. China's stockpiling is affecting the world markets. It's affecting, and further down in the article, Joe Biden and his Biden administration slammed China's trade practices in a memo released earlier in May, claiming it was over manufacturing solar equipment and that it was harming the West. Sounds pretty afraid to me, Jeremy. And the U.S. Trade Representative, the Department of Energy, and the Department of Commerce will closely monitor the import patterns. And this is the appetite that we're seeing, the appetite of silver import. We constantly talk about central bank buying of gold, but this is shifted now entirely to silver. Under Chinese President Xi Jinping, and most recently, they've spiked the silver imports over the course of the summer, June and July, with both months surpassing net imports of more than 400 tons. This time last year, they're only doing about 200 tons. So this is for sure. The accumulation of silver has emerged as a significant economic maneuver for price spikes, and specifically, that 10% surge compared to the Western markets is a clear sign that he who has the gold, in this case silver, can set the rules. They're making the rules, and the world is now seeing, and they have to now. The West is now warning, having Biden administration basically pleading with China, can you please slow it down because we need the silver too.
And also, when you're raising the premiums over in Asia, what that's doing is, I don't know if it creates a carry trade, but it certainly entices people to buy it in Asia, potentially to look to sell it, buy it in America to sell it in Asia. That brings more product over to Asia. So that is a carry trade.
Mm-hmm. And it was not just China. We have India's growing demand. India has been a major importer and buyer of silver, significant quantities from the West in the recent years. India's recent decision also to reduce its import duty on silver is only going to increase the demand for the silver. And has huge implications to us here in the West because, especially those industries that rely heavily on these industrial metals, the price is just going to continue to rise. And as cost of production continues to rise, it will impact everything that we have here in Canada, in North America. And, this is just one of those things that we cannot be on the outside looking in. We're going to start participating, and participation will only drive the silver price into a new breakout territory.
And the number 18778 silver, the website guildhallwealth.com, and this is a good time to consider getting into the race yourself before the prices really take off and hold some physical gold and silver. Jerry, when you think about the path to $50 silver and beyond, you look at the retail market investor who decides, I want to hold physical silver. Maybe as gold continues to rise in price, Citibank looking for $3,000 gold, price gets into those levels and beyond, people start looking at silver saying, oh, well, I think that there's more value to be had in this metal. Maybe they start to hear about China's accumulation or India's accumulation for industry and whatnot. And you realize that industrial demand is one route, retail demand is another. But there's always the potential for that third path to $50 and beyond, which seems to be what they've been trying to stave off with this move recently when silver broke $30, which is a silver squeeze. Mm-hmm. Talk to us about that.
Well, to summarize the entire JPAR article, they wrote about the silver squeeze, and analysts are warning that the growing demand for silver coupled with the limited supply could lead, and I believe that it will eventually lead to a silver squeeze similar to the silver squeeze of 1980 if the investors begin to panic. And I think there's many reasons for a potential panic coming up. The rush to buy something undervalued for a safe haven, the rush to buy silver, especially when you cannot get your hands on it. The unobtainium, prices will skyrocket, and this will cause significant disruptions to the global economy. So the silver squeeze happens when the paper trade goes the wrong way, when the shorts in the market can't be covered, and when the COMEX and these institutions and exchanges that promise delivery of silver can't deliver the silver that they promised, the defaults occur. And the acceleration at which this happens, it could be immense, causing that financial disruption. This is the reason why I believe that China and India, the BRIC nations, have honed in on silver to be used as the weapon in this in leveling the playing fields. They're using silver, understanding how important silver is in everyday life, in our everyday life.
Do you think they're taking advantage of the fear of a silver squeeze to get as much as they can? You don't hear talk about silver on mainstream financial media anywhere. It's rarely discussed in newspapers. Are they taking advantage of the sort of the negated Psy war in precious metals? Because if people only knew what the real supply fundamental was in precious metals, especially silver, they'd probably be clamoring hand over fist to get into the market.
Yeah, of course. I know for certain that that's the way the media works, legacy media works, but just not reporting it. And, unfortunately, sadly, the Canadian and North American markets were just underinvested in silver. Less than 1% of the population own any physical silver. So they've done its job. But we do have entities and retail markets that are now opening up, introducing silver. You can go to Costco. You can go to almost Walmart. You can go online and eBay. People are waking up to see silver, number one, and seeing how undervalued it is, and understanding how important silver is in the economy and everyday technology. The more we advance, we'll need more and more and more, and I think we'll hit that mass appeal. And silver is going to be that one metal. I think we have that opportunity, that one window of opportunity here that could really, really change your lives and unshackle yourself from the debt situation that you potentially could be in right now. And the uncertainty of
central banks are probably doing that too, right? They've got a second column set up in their accounting books for revaluation.
Yeah, and we're seeing this all culminate right now. A lot of news coming up with capital requirements we'll get into in the next segment. But this is going to be life-changing, and it'd be as quickly as a shift in a higher price. And with the silver to gold ratio back at 85 to 1, this is the market to be looking at. Silver is going to be your financial weapon to combat the inflation, to combat the depreciation of your currency, depreciation of and achieve capital preservation. And we want to be on that journey with you. You want to give us a call, and we can show you the ropes.
The number 18778-SILVER, the website guildhallwealth.com. It's amazingly simple to acquire physical precious metals. There are some costs involved, and we want to get into that, Jerry, in the next segment of what do we look for in terms of rates and how to get into the market, what should we be expecting. But holding physical precious metals is practical. It is an asset. It's been around for thousands of years, both gold and silver. They're still pulling it up out of sunken ships and out of the sand. Fact is, it's been around for thousands of years. It is real money. It is a store of value. It's not necessarily about a price. It's actually a measurement tool of monetary value, and that's why the BRICS are moving to back their system with 40% gold at least, and that's why we believe the system is probably moving towards that again for us to be able to have equal economic value and opportunity. The number 18778-SILVER, the website guildhallwealth.com. Holding physical precious metals in your registered account is the easiest thing. Guildhall will walk you through it when you're all done, you are going to have physical gold and silver fully allocated to you, held in a segregated account, serial numbers provided, access to go and personally audit your holdings, and you will know that you are holding physical gold and silver in a vault outside the banking system, and you are secured against anything financial disasters that could happen, and you are ready to make the gains on these leaps and bounds that gold and silver have been making. Every week, we see more and more analysts coming out in the market, both from our side of the aisle and mainstream financial news, and major banks calling for bigger and bigger moves in the market, higher and higher prices. Speaking of the elite, Jerry, I don't know if you saw, but Rothschild closed up shop in Chicago, I think.
More and more.
Where
are their assets going?
They're down to 3. Oh, they shuttered an office in Miami that just opened, and they're getting smaller and smaller in America.
I think it has something to do with that very important executive order, Jeremy. That's on the podcast.
I will have to
I'll
look
be
in
offline. We'll talk about that later.
I'll have to look into that. Let's revisit
Yeah.
Basel III rules.
Ooh.
It's probably been a couple years
What is that?
since the Real Money Show discussed Basel III. It was big news for a while there. Why don't you give our listeners a very quick overview of what those Basel III rules are and why, as we move into the school season, you start marking your calendars and getting all the colored T-shirts for your kid. They have to wear this colored T-shirt and that colored T-shirt. You start marking all the days on the calendar. Why October 1st is going to be important to mark on your calendar.
Yeah. A lot of stuff happening with regards to the Fed and Basel III. Basel III Accord was implemented back in 2019, which requires big banks to hold significant of their capital in high quality assets to hold tier 1 capital, and that would be a gold, tier 1 asset. And this was designed, and in this implementation, the purpose of it was to insulate the banks from financial stress.
So very quickly, number one, insulate against stress, right? Financial stress. Number two, they said not just cash, but also gold is now a tier 1 asset.
Yes. So following the Fed's stress test earlier this year, the Federal Reserve Board this Wednesday announced so this happened this week, announced final individual capital requirements for all large banks effective on October 1st. Standard equity tier 1 capital includes a minimum of 4.5% requirement for all banks. Banks falling below these requirements face automatic restrictions on capital distributions and bonuses. So no money for you, bank. If you don't have what we need on your balance sheet, if you don't have good capital, if you have junk, we don't want it. We're not looking at it. It's got to be a tier 1 capital. And the Federal Reserve Board committed to improving stress test framework, and gold is included in Basel III bank requirements as a tier 1 capital. Allocated gold is considered a tier 1 asset as it has zero risk weighting. You heard it here, zero risk in gold. This is because allocated gold is not considered a part of a custodian bank's balance sheet. Unallocated gold, the stuff like the ATF that Rafi Farber talked about, is considered tier 3. So you cannot hold it. The purpose of Basel III reforms ultimately were designed to enhance banking stability and reduce the likelihood of defaults during economic downturn. This means that on October 1st, large banks in the States will hold gold as reserve, considered a high-quality asset. To us, this is sounding like, okay, we're going back to sound money policies. This is leading large banks having to utilize gold as money and a gold standard, which is potential return to a financial system in which the value of a country's currency now is fixed in relation to a specific amount of gold, or linked to a currency of a country that does so. Currency.
It's just making me think about something here, Jerry. If banks are going to be tied to having these requirements, reserve requirements and capital requirements, they might be strapped for liquidity. This could be actually a behind-the-scenes signal to want to lower interest rates, to give those banks excess liquidity that they wouldn't have if the interest rates were higher.
That's true.
And of course, lowering interest rates by the Fed's rules, we're playing by their rules, would be inflationary. Having lower rates is inflationary. You're gonna kick up borrowing.
Borrow more.
Right?
You'll need more and more to borrow. That's right.
So we've often said that lowering interest rates is throwing in the towel on inflation.
That's right. It is.
So they've signaled it a little bit. Here's maybe a back-end reason why they might want to do it. And we're heading into, that would be part of maybe October surprises.
There we go.
You know, we think about, okay, we're heading into election season. What's happened in the past? I remember 2008. That's when we had the crisis. It was before the election. Remember, they called everyone back to Congress and all of that type of stuff. I remember 2016 election night, gold burst out of the gates. It went up something like $150 or $300. It was a massive move up, and then it went down. I don't remember anything really happening during the 2020 election as far as gold and silver are concerned. Obviously,
No.
Silver and gold had pretty good years, though, as of 2019 and moving forward.
It did.
But I don't know. What do you think here?
You know, ultimately, what I believe what's happening here, I think the true purpose of these new requirements, they're not just another set of rules, but really intended to keep the U.S. dollar stronger against the BRICS. Over the course of the last 2-3 years, it's been the theme of de-dollarization, the theme of the U.S. dollar is dead, U.S. dollar is not being used for trading Saudi oil. What's going to happen? The U.S. dollar is dead. The U.S. dollar is not dead. We suspended the gold standard. It was never canceled. We were running parallel with a gold standard system that we just have to ladder back on, merge back into our lane, and we're back to competition and keeping the U.S. dollar stronger against the BRICS. I've been using the statement of, okay, the U.S. is on the outside looking in, of watching everyone merging together. We have a coup all across Africa, really seeing, the shackles being released over these African nations that were being pillaged for the resources. Now you're being able to empower through a gold standard. Outside looking in, the Canada, U.S. on the outside looking in. This is the one way to bring back the stability of the U.S. dollar, and another way of refinancing all of that junk debt that's been on the balance sheets of the Federal Reserve and all of these zombie banks that we have in the U.S.
Let's stay on that over the next segment, and where does that take gold and silver over the next several years if they intend to actually do the things that you're talking about. The number 18778 silver and the website guildhallwealth.com. When you're holding actual physical gold and silver, you are in control. You are in control. You're not waiting on advisors and managers to flip you in and out of different ETFs and different mutual funds and all of these things and take their management costs, take their management fees along the way. The question is how are you doing? It's interesting that with gold and silver, you don't have to do anything at all. And that's why I find people move towards physical gold and silver, because they feel like they're taking control of their money by simply doing that, holding money. Gold and silver, real money, no counterparty risk. It's part of the reason why there are some different costs associated with it, like storage. Instead of paying management fees, you're paying to physically store your assets. Just like if you were moving and you needed a storage container, right? You rent that to put all your stuff in. This is the same thing. You put your money in Brinks, and you physically have to pay to have it fully insured, fully secured, but also have that ease of liquidity. Jerry, before we get back into BRICS and how it potentially makes Western countries competitive against BRICS nations, talk to us about cost of doing business. If I want to get the cheapest price in gold or silver, what do I need to do? Do I just shop around? Is that the best way to do it?
I think naturally people are doing that. I think we have, I myself as a buyer, there's a couple things. There's about 3 things you look for: is price, service, and delivery. And there are a few things that I don't compromise on, and one of those things is service and quality and delivery. I can compromise sometimes. I would rather compromise on price if I'm not getting the other things that I'm looking for, which would be a potential strategy, especially in this case for silver. I'm thinking about the long term. It's not just about price. What we do is provide the rate that's going to help you, dollar cost as much as possible to lower your buying price, understand why you're purchasing, and understand how long your objectives are. So with Guildhall, what we do is understand why you're purchasing. If you are a prepper, you may want to get smaller coins and bars for your holdings. If you're looking to just put it away, set it, forget it for 2-3 years, and you're looking for to make potential gains, I would recommend, and I would introduce larger silver bars like 100-ounce bars, because you're now lowering in your buy price.
Yeah, it's not just a one size fits all with everything, right? One of the things I've often noticed is people will go out, they'll buy products based because they say, well, maybe they were just focused on price. And of course, look, when we're buying into a market for the first time, we're always going to be price sensitive. It's one of the only things that we actually can control because we're not experts yet, and we want to be in control. But you see a lot of people make some mistakes because it's not always price.
No.
Is it LBMA approved product that you acquired? I mean, how many times have we had to turn away buying back product from people because it was not LBMA? And what that means is it's cheaper to buy, but it's not globally recognized. We couldn't take that product and offer it to registered account holders, right? It's got to be LBMA to go into a vault for storage. And so, you miss out on the liquidity aspect. It was cheaper to buy, but you didn't get that value back when you went to sell.
Yeah.
It's just one example, but it's one of the reasons why you want to have a conversation with one of our dealers at Guildhall, one of our associates, to understand, okay, what are my needs? Because maybe I do want to spend a little bit more for Royal Canadian Mint, because I'm more comfortable with that product. It's Canadian. Yes, there's a slightly higher premium, but it gives me peace of mind. And I'm willing to spend a little bit more to have that peace of mind. There's all different things you want to go through, and we'll walk you through those here at Guildhall. So enough said. The number 1-877-8-SILVER, the website, guildhallwealth.com. Jerry, let's get back to the U.S. and Canada being competitive. How are we going to roll back the fact that 1 in 4 people are working for the government in Canada, and it's the only thing driving up GDP is spending? And of course, we know that spending is inflationary. I wonder how many people would love to go back and say, no, I don't want that CERB check, because yes, it was free money, but it's going to make everything that much more expensive in a couple years. No, don't give me anything else for free. How do we roll back the clock? How do we get back our sovereignty? How do we get back our wealth? How do we get back to a place where we can say things are better this year than they were last year?
The only way to do it is to insulate yourself, and insulating yourself with good capital. And this capital must be decorrelated, decoupled from all of the financial madness. The U.S. Federal Reserve and the board went through stress tests the entire year and found out, guess what? A lot of stress, a lot of risks, high rates cause a lot of bank closures. Now we're on the verge of cutting interest rates, which usually leads and pretty much always leads to recessions. Well, guess what? It always leads to hikes in silver prices, 300-400% hikes. Basel III reforms were designed to enhance banking stability and reduce the likelihoods of defaults during economic downturns. What are they expecting? They're expecting economic downturns.
And the beauty of it, Jerry, especially having an asset like gold in your portfolio, is if you have the US dollar losing value over time, but the gold on your books is rising in price, you're hedged. As a bank, you're still managing the collateral. You're still managing the capital in your bank.
Exactly.
So it's a no-brainer.
It's a win-win. You're not only protecting...
Way to go, Federal Reserve Board.
You've set us up. And again, it's a sad thing that only a few of us know. This is a small window of opportunity. And again, we can't provide you with financial advice. All we can do is lead you to these trends. And some of the trends are, coming from UBS analysts. Gold market is not overextended despite record highs, record prices. We're going to continue as geopolitical risks rise, as banking crises rise. You want to be in the gold. You want to be in a win-win situation. Not just preserve your wealth, but profit. Your insurance policy in gold and silver will become your investment. The silver policy that you have, the insurance policy in your silver, will become your investment, and it will grow your portfolio. The Bank of America says buy gold like central banks. We have to listen to these trends. And further, we had interviewed Mark Farber years and years ago. It's been a long time, but he was the author of the Gloom, Boom, and Doom report. He's warning that virtually all asset classes minus precious metals are currently in a bubble situation. Where would you put your wealth? And understanding that everything that has ballooned to this bubble territory is about to pop. Would you put your money there? Would you put your money into overvalued stocks? I don't think so. You're going to want to put as what Mark Farber, he sees precious metals as the safe haven. It's your safe haven. When we have bubble territories balloon because of the yen trade, the yen carry trade over the course of the decades of being able to borrow the yen and finance all of these bubbles, that's coming to a close, because this week alone, last week, the governor Ueda from Japan, the Bank of Japan, says that rates will go higher again in Japan. And I want to remind you what happened when they rose rates on August 5th, beginning of the month. We saw the Black Monday. And bubble territories will get popped, and you don't want to pop with them. You want to rise with precious metals. You want to rise with gold, rise with that silver squeeze, that rocket to the moon. And this is that one window of opportunity. And again, we just want to be a part of that journey with you guys.
The number 18778-SILVER, the website, guildhallwealth.com. Jerry, thank you so much. Thank you to all our listeners. If you've missed a show, catch us on YouTube, Rumble. Check out our posts on X. Check out our posts on Telegram. And we can't wait to speak to you next week here on The Real Money Show on 640 Toronto.